Let me remind everyone that today is the last day for new subscribers to the SMT newsletter. I'm confident that gold has completed an intermediate bottom. I only let people join the SMT at intermediate bottoms. I don't allow people to jump on board after a rally has progressed for many weeks, thinking that they're getting in and going to make a lot of money. Usually what happens is people get very bullish near tops and and then they buy too late and they get caught when the next intermediate correction comes. So I've kind of changed tactics. I only open the SMT when we're in the declining phase of an intermediate cycle and preparing to form a bottom, so that I can get people to buy low and then sell high. So this will be your last day to join the SMT. In this video, though, I want to talk about the dollar. I am pretty much convinced at this point. I may have to see another week or two of action, but I'm pretty convinced that this kind of a semi-parabolic move ended the secular bull market that began in 2008, and the dollar is now transitioning into a secular bear market. So I think this obviously was a 3-year cycle low. I think this was a slightly short 3-year cycle low, and the reason I think that is this rally was able to move above these peaks here, but it did not obviously make a higher high, and then rolled over. This was not necessarily left or right translated. It topped kind of right in the middle of a normal duration intermediate cycle, so it could have gone either way. It did hold above this pivot, so it was not a failed intermediate cycle, but I think again, I'm probably going to have to see another week or two of action, but I think this intermediate cycle here is preparing to left translate, which means it's going to come down and it's going to break this pivot. It would probably also break this pivot. And so what I'm saying is that it looks like this is a new 3-year cycle, and it is potentially already left translating, which is extremely bearish. All of the money printing coming out of 2020, and then all of the money printing over the last year to rescue the banking sector that was in trouble, I think has finally broken the dollar. So I think we're probably starting a new secular bear market. And let me expand this chart, because I think we're in a similar situation as we were in 2000. So here was the last secular bear market from the top in 2001, it looks like, I guess, until we got that bottom in 2008. So about a 7-year bear market. And then we entered a secular bull market. Generally, each 3-year cycle low had a higher lows. But I think that's probably now ended. And also notice that this secular bull market right here from 2008 until it topped, again, I believe it topped in 2022, did not and was not able to make a higher high. And this, if I could expand this chart even further, you would see this pattern continues. The previous high in the dollar back in 85 or 86, I think it was much higher than this. So we've been in actually a very long-term secular bear market for multiple decades, and that's just the pattern for fiat currencies. They all eventually go to zero because governments are unable to resist the temptation to abuse the printing press. But for right now, I think we are in, the dollar is in a secular bear market. Now, during this secular bear market, this created an inflationary phase. It culminated with that move to $147 in oil. Gold made its initial move to 1900 from the low of $255, I think it was. So a very large bull market in commodities in general and in gold specifically. Silver went to from about $4.50, I think it was, to $50. And if we are now beginning another secular bear market, you can see how when I say $5,000 gold is going to be a piece of cake and $10,000 gold isn't out of the question, you can see how that could be true just based on what happened during the last secular bear market in the dollar. And if this is the beginning of a secular bear market, then eventually it's going to come down and break this pivot and make lower lows, and the ongoing devaluation of our currency will continue, which it must. All governments and empires throughout history follow this path. They get so indebted that there's no feasible way to service the debt other than to debase the currency, and we are definitely on that path at this point. So I think we're entering the next leg of the commodity bull market, and the next leg, inflationary leg. The inflationary phase did not end with that, with Russia's invasion. That was just the top of the first leg, and then we got a corrective move, and I think we're probably starting the second leg of the inflationary period that we're in, and probably will be in for multiple years still.